Hello traders, it's Samurai Trader here. I was about to record a recap from last night's trades, which we'll get to in a moment. Actually very early morning trades for those in the US. It's also just after midnight Central Standard Time now. I'm just in a short trade here just after 6 ticks. This is actually and I actually got a tick of slippage. 1 2 3 4 5. Oh no, 1 2 3. No, I'm okay. No, I did get a tick of slippage. Look, I might just increase my target one more. I've got a slippage on my entry. So I'm after a 6 tick target. Now that may not sound like much, and this is on the 1 tick 6J, which is the yen. And so 6 ticks is $375 less commissions, which would be because I trade the 10 contracts on this, which is 47.20. So I just had a little trade just over here, and I'm hopefully going to make some money out of this one. And we'll go back and in a moment recap the 5 out of 5 that I had earlier this morning. So we're just patiently waiting. I'll just pause this video. No, I won't. Maybe we are going to move. The great thing about the yen, it's actually a futures contract, and so you've got a fixed commission, unlike say trading forex directly. And so what you see here, we apply to I love trading the RTY, the ES. It doesn't really matter which futures market you trade. We use exactly the same patterns that you see. You can see my little arrows here, which is my turning points, and you can apply this to any time frame, any market. Now what I was about to say, this time of day or morning, it's quite quiet for another hour or so. Then we head towards the London Open. So the London Open will be in an hour and 3/4. So the London Open, the volume picks right up. So even though I'm on a 1 tick right now, as I head towards the London Open, I'll need to increase my time frame on my Renko chart here to a 2 tick. Now if I trade the 1 tick, generally speaking, providing I don't have any slippage, I've usually only got a 6 tick stop loss. So nice tight stop loss, but I usually just have a nice fixed target. I like to get in, get out, get paid on this market. So I'll just pause this. This should come back down again. Now remember, this is all a game of probabilities, remember. Okay, so going by the pattern, we should retrace, but we'll see in a moment. Slowly coming down. Oops, we've jumped back up again here. So I'm just going to pause the video again, traders, just to save on time. We've been in this for about, gee whiz, 15 minutes now. That's sort of usually about the maximum I'm in a trade normally. So this trade's been going about 30 minutes thus far, fairly unusual. It's because we're heading up towards the open. So it's now 12:31 a.m. Central Standard Time, and so as I mentioned, at 2 a.m. we do have the London Open, where we really see the volume pick up. The beauty about this market, and including the 6E, basically 23 hours a day you've got great trading, and you don't have to have a large account. These are 2 tick Renkos, so you can even get away with quite often trading the 1 tick Renko. In fact, that trade just there was based upon trading the 1 tick just over here. So I actually entered, so you could trade the 1 tick a lot of the time, and what that means is your stop loss is smaller because you can get in much earlier. And so therefore I like to tuck my stop 1 tick above a swing or below the low. If I enter there, be there, be there, there or there. So I can just see the 6E's had a big sell-off. So once again, I'll just pause this video. So quite often you'll find that the market can just pop very quickly. So just thought I'd hit record. I know I'm 5 minutes into this. There is a risk in trading. Just remember that, traders, I haven't pulled the disclaimer up. I will in a moment. Don't trade with money that you can't afford to lose. So you can see here we've got fantastic market depth on this market as well. So I'll get filled usually without any slippage. Well, here this is I'll hit my target, but on any stops I usually don't have too much slippage. Slippage is where you get out at a slightly worse price than what you'd like to be out of the trade. This is sort of a danger area because I'm right on the pivot just here. And by the way, this is called an overlay chart, which I'll explain in a moment. Looks like we're going to bounce again. My goodness, within one tick. So really, if what I could have done is front run the pivot by one tick. Front running is where you get out one tick in front of a pivot, but we have sort of been backwards and forwards on the pivot earlier. Pivots can act as major support resistance zones. So once again, we're going to recap. I think it was 5 or maybe it was 6 trades earlier, and they're all winners, but they're all based on logic. Every trade I take is based upon a pattern, patterns that appear in the market each and every day. So that was a pattern. This would have been a pattern. All of these are patterns. Okay, now there we go. So I think I clicked on that just in time. So it was another 2 out of 2. So let me pull up the disclaimer, and we'll then go through the other trades and I'll explain the logic behind them. Okay traders, let's now, sorry if I repeated myself then, let's go to the PowerPoint now. I'll just quickly discuss a few things. Sorry, put my teeth back in, discuss a few items, then we'll go and review those other trades I've taken for the day. So first of all, I call this the $1,000 a day challenge. How to average 100 a day net profit trading 2 or 3 hours a day, simply by trading between 5 and 10 contracts, just scalping the market, get in, get out, get paid. I call it POQ, power of quitting. I love to get in, I've got a target that I hit, then I finish. That works for me. Now for the young guns, I'm 65, so that suits me, but the young guns may want to keep trading all day. Now what I teach in my sessions, you can apply to futures, forex, stocks. This is session 126, and the focus today is on the 6J, but as I mentioned at the start of this video, you can apply whatever I teach you here to all markets. Did mention if there's a risk in trading, don't trade with money that you can't afford to lose. Stay on the simulator until you are consistently profitable, and that's a great thing today about trading platforms. You can trade on the simulator until you're ready to go live. If you haven't already, just a very quick advertisement, if you haven't already, you can download The Truth About Day Trading, one of my ebooks below. Also, you're going to see me bring up a spreadsheet in a moment. You can download that as well. So if you go to the description link below, make sure you subscribe to my channel so you can be kept up to date with all of my videos, and why don't you become a member? And so just a very quick ad here. For $297 you get all of my indicators. There's over 35 PowerPoints. There's basically, well, as my members describe the members area, it is a gold mine. So I've got indicators for just about every trading platform. If I don't, I give you the indicators so you can set up the indicator settings, I should say, so you can set up basically and model exactly what I do on virtually any trading platform. Now I have a bonus also at the moment going, where you can also attend 8 of my live, they're also recorded, 2-hour coaching sessions. I run every Tuesday and Wednesday evening, 6 to 8 p.m. Eastern Standard Time. I run 2-hour live classes, so you can attend that for a month. If you decide after 1 month, hey, this looks good, you can then continue for $197 a month. And so that's an option, but you've got to email me if you'd like to continue, which we've got a couple of hundred members you'll see attend those sessions. all for only 297. Let's now get into this. So this is a game changer for 98% of the population. The challenge is traders. Most traders don't believe they can do it. That is, they trading with the trend and follow the gold, as you're about to see. It is so straightforward. Trading truly is 80% head stuff. It's maybe even 90% head stuff, 5% money management. That is very important, and the strategies themselves. Now, how do you achieve that? Well, trade 10 contracts by only $100 a day. Now, if I just want to quickly show you this, and I may as well bring this up now so I don't forget this. Now, I mentioned about trading the one tick. Very low time frame. You can't trade it during the New York hours, it's too fast. But after hours, so the market reopens at 6 p.m. Central Standard Time. My apologies, 5 p.m. Central Standard Time, and it's what we call the Globex session. And 80% of the time, you can trade a one tick chart, which is a really low time frame. Now, there, if you target $100 a day only, say if your income's, you've got a target of $5,000 a week, within 12 weeks you have the potential of earning that by only really scalping 4 trades a day, or a bit over 3 slightly larger moves. This is a true reality. Now, down here, how my compound table works, because there's ridiculous compounding tables out there. This one only has you add a contract every time you double your money. So say if you started with 1900, every time you get another 1900, you start trading a second contract. So you're using the market's money. Now, a question that comes up regularly, how many contracts could I trade on these markets during the main hours? 20 to 30, no problems. After hours, sort of, I trade 10, I might add, and you still got fantastic market depth. 100 you might get slippage, but no problems with 10 to 20 whatsoever. So this is the true potential. Now, what if you don't have 1900? Well, you got the option of either trading with a prop firm, which is becoming so popular now, or you start on a micro contract on, so we don't have micros where you do on the 6E. They're just thinly traded, not enough volume, so I wouldn't recommend them to you. But you start on like the micro ES, or maybe say the micro Russell or the YM. Look, you can do the NQ, but it really moves very, very quickly. So if you're a brand new trader, see, what you need is good solid setups that are tradable, that anyone can learn to trade, and that really gets back to trading patterns. So you've got to have a goal that's a stretch, but it's realistic. Okay, so either 5 at $200 a day, but you'll see in a moment how to actually do that. Now, one thing I do get is a lot of questions on those that trade Forex. How does it relate back to Forex? So a 1 tick Renko is a bit like a 5 tick on the Renko chart. A 2 tick Renko on the currency futures, my apologies, is the equivalent of about a 10 tick. A 4 tick is somewhere like a 20. So if you trade Forex Renko charts, here's sort of the settings you would use in comparison. Down here, I just want to quickly now bring up, before we go back and review those charts, is I talk a lot about gaining clarity. Clarity is power, knowing exactly what you want. And so by having targets, sensible targets, it gives you something to aim for. Now, for this, if you're going to trade the big contract, okay, and this is where you won't usually see anyone else that's a trader or an educator wanting to show you how much money you really need in your account. Well, actually, you only need to keep about half of that in your account, because we never ever risk any more than 2%. Okay, so we never risk more than 2%. So you can have up to a $62 stop loss. So that means you're going to need around the $3,200 account size. Now, I know you think, if you're a brand new trader, well, hang on, my broker says I only need 500 in my account. That is correct. However, if you have a loss of $60, there goes sort of like 10-12% of your account. there's only one way to trade, traders. It's the right way the first time. If you don't have this money, just start on a micro contract, which I show you how to do that as well. So this is all I need is 25 ticks a day, 157, and you can see where you are potentially in 14 weeks trading 17, earning your 12-13 grand a week. You've now got 60,000. Now before you have, oh, I'll never get that done, or it can't be done, BS. Just watch how I do it. You can do this. Don't let past experiences ruin your trading career. If up till now it's been difficult or you haven't made it, let's master the mind, because it's not until you master your mind will you master your trading. You can do this. You want to trade with the trend initially. Now as we go to the charts, there's certain things that I'm looking for, and all of these are major support resistance levels. Okay, they all plot on the charts. I've got indicators for all of these, and we bounce off these. Price goes to these every day, but you'll see these in a moment. So let's go to the charts. So just before we move back to the ones I had earlier, just note here what we bounced. See that black line? I'm not going to tell you what it is. It's a little trade secret, but this is something from a higher time frame. Okay, and oh, I mustn't forget to explain this as an overlay chart. We bounce off this every single day. You'll see bounces off this level. Now up here, these are pivots, by the way. So these are pivots. Then I've got my turning point indicator, the arrows. I've got a super scalper there, but I just wanted to point this out. For those that were in my coaching session this morning, we're just talking about how what's the word for it, accurate, or it's just such a high probability reversal point. Okay, so it's 5 trades I'd taken. I thought it was 6, but it's only 5 here. So let's just start from the left hand side here of the chart, then we'll go through and I'll take you through one by one over the next 5-6 minutes. Now this is called an overlay chart. An overlay chart is where I have a higher time frame, a number of indicators from a higher time frame superimposed on my entry chart. Okay, so this is a 4-2. Now see this blue line here? Like you may ask, look, why not sell just there? Okay, so I've got to bounce off a moving average, but you can see here that my blue line here has not hooked, so I want to see that hook down. So here's my first trade here. May not look like much of a move. I think it was only 6 or 7 ticks in that move, pretty much out at the pivot, or just down below here. Nice little trade. That was trade 1. Now what you'll see, it's a trend following trade. Okay, and you've generally got plenty of time. That was over 5 minutes, so you got plenty of time to get your trade entry in. Now I want you to note the trend direction on the EMAs. Okay, and note there we bounce off a pivot. Now what about this one here? If we had have taken this one, note we bounce off a pivot. So the further away you are from pivot points, the better. Remember, these plot automatically on your chart, so it makes it quite easy. Now I've got here a trade number 2. This is a nice little winner. Just note major EMAs all in a downtrend, fairly straightforward. I am waiting for the hook. I'm waiting for confirmation on my anchor chart. Now sometimes I won't wait. If I've got a very strong uptrend or downtrend, I'll jump in before I get the hook, because sometimes it can delay you a few ticks, but it'll keep you out of a ton of losing trades if you do that. So now I come on down. So I'm out of that trade. I was after, I think, 10 ticks out of that one. You had another potential scalp just here, by the way. I want you to notice everything is down, and that's a little pullback here at the pivot. Wasn't in that one, but I did take this one here, this one long. This is what I call a T3, a T3 traders, and this is trade 3, but I call these T3s. It's a reversion to the mean trade. So even though I've got a little bit of divergence, I don't have to have divergence. Now unfortunately I got out of this trade very quickly, and I only picked up, I think it was 3 ticks out of this one, and I can't remember it very plainly because it really moved. Now what can happen with a T3, because you have little or no divergence, when you get up to your EMA and even to the pivot, quite often you'll bounce. So what I like to do for insurance, when I get up there, I like to get to break even or take profits. It's a very high probability scalp, so I'm usually in and out very quickly. Now I want you to notice the color. I've got a color change here in the cloud. See, orange generally I'm looking for shorts. Okay, but here in this case I'm long. Well, why not take that one there? I had a fantastic reason. It was off a great trending EMA, and something was also happening on a higher time frame. Now as I'm coming down just here, I've now got a beautiful trend trade here. I want you to notice here that I get a hook on my anchor chart 1. I've got a slingshot. I've got everything is pointing long. Okay, so go long. Now see the dark blue line up here. We've always got to be careful of that because sometimes we can bounce off that level. You can see we're starting to get a wee bit of divergence at this stage 2. So we do have some divergence. We get a pullback here. So I had 4 out of 4, but I hadn't quite hit my target for the day, so I'm just sitting back and waiting. Now there's another plain vanilla entry just here. Now remember, when you're buying into pivots, okay, you always get ready for a bounce, and there's a bounce there. So what that means is, and when people say to you, well, you've always got to go for 2 to 1 return, risk $1, get 2 back. Well, traders, if you're buying and selling into pivots, that just don't work, because if I entered here, how far does this go? We'll see there would have stopped us out. Oh, we could have had a bigger stop. Well, it doesn't work. If you're a scalper, the whole idea is having low risk entries, which means if you have a loss, it's limited per contract to 62.50 on this as a maximum stop loss. Now we're pulling back. Now at this stage here, you can see how flat we are. Now in fact, for members watching this, we had a bounce on our anchor chart 1 just there, but I didn't take it because see how I'm right at a pivot and my major EMAs are flat. Traders, if you want to really go for the highest probability trades, I want you to look at the logic of most of my setups. See that that white and black line, okay, my turning point indicator. Right, now that turns on the second candle, usually sometimes the first. You know, why take high risk trades? Trade with the trend initially. Now as you go along, like here, this is a reversal strategy, a very high probability reversal strategy, but initially you want to trade these, you want to trade these, you want to trade the higher the bounces that we had up there. Why? Because they're very high probability. Okay, so as we come down here, I wasn't in that, unfortunately. There was another trade here I could have taken. Look, I just didn't take it, and on reflection I should have, woulda, coulda, shoulda. Look, you can see here everything on my anchor chart was screaming long. Even on my entry chart, go long, slingshot, go long, and I didn't. However, I took my revenge. Not really revenge up here. This is another T3. Remember I mentioned T3s are your mean reversal trades, like we had way down there. So and for members watching, it turned into a T10 as well, which is a reversal setup, and so just a plain vanilla, and it was also a pivot bounce. So traders, when you have divergence, see that there, that's a divergence trade just there, and a pivot bounce. And let me just check one other thing. I want to show you something. Well, now when I say I want to show you, hopefully it's there, and it may not have divergence there, by the way. Yes, we do. Okay, beautiful. Right, I thought we would have. Okay, see here we've got a higher high over on an anchor chart that I use. See how I've got a higher high, and see this is a very sensitive, it's called a platinum or a zero lag MACD. See how it drops away. So that would have been, and look at that move there. And so woulda, coulda, shoulda, if I had have noticed that, that was a beautiful setup just there, just a great reversal, especially when they're off pivots. Your best bounces will quite often come off pivots. So here we've got that T3, ended up being, you had a couple of T10 entries, and away we went from there. And then there was some nice little trades thereafter. All of those were potential trend following trades. Traders, this is not rocket science. And for those that say, oh, you know, this won't work, that, well, why not? If you're trading on a lower time frame, we're waiting for a retracement, and we're trading in the direction of a higher time frame. Now when you go and use things like the overlay chart on the one chart, it will give you just about all the information you need. What it won't show you though, unfortunately, is divergence. So I've normally got this chart on one of my other screens, okay, so I can see what's happening on a higher time frame. But these strategies, they've been around for years. Traders, I've been day trading now for 28 years, and 28 years and thousands upon thousands of hours of trading. You know, I think it was Gann that famously said one day that there's nothing new under the sun. And when I look back at the strategies that I trade, they've been around for many years. And I forget who said it, but beware of the man that says he manufactures antiques. The setups are the setups. What I offer you here is really for 297. I'm going to give you 28 years basically of trading experience, all of the setups, all of my PowerPoints. There's a complete members area, and most importantly, attend my live sessions. If not, you can email me any questions and I answer them in the session. You see, it's okay to read a video, sorry, to watch a video, or to read a book about trading, but it's a bit like learning to swim. Okay, it's totally different. So traders, this is session 126. You can trade these setups on any futures market, and hope to see you on board as a member soon. Cheers everyone.